Today's update is not about rumors. It's not about secret dates, leaked exchange rates, or online speculation. What we're discussing today involves documented institutional activity connected to one of the most powerful financial organizations in the world, the World Bank, and when the World Bank becomes involved, the global financial system pays attention. Many of you watching this have been following the Iraqi Dinar story for years. Some of you are newer, while others have experienced every rise in hope, every disappointment, and every long silence in between. This journey hasn't been easy, emotionally or mentally, and that deserves to be acknowledged. Holding emerging market currencies requires patience, discipline, and the ability to stay grounded during uncertainty. What makes today's update different is the source. This is not coming from forums, anonymous insiders, or recycled talking points. This discussion centers on institutional-level movement involving the World Bank, an organization that does not act casually, impulsively, or without extensive analysis. When the World Bank steps into a country's financial framework, it reflects deliberate planning, evaluation, and long-term intent. Before going any further, it's important to set expectations clearly. This is not an announcement of an overnight revaluation. It is not a promise of instant appreciation or guaranteed outcomes. Instead, this development represents something far more important and far more sustainable, a shift in structure, credibility, and long-term positioning within the global financial system. To understand why this matters, we need to understand what the World Bank actually represents. Established in 1944, the World Bank plays a central role in the global financial order. Its mission is to reduce poverty, support economic development, and strengthen financial stability worldwide. The bank works directly with governments, central banks, and financial institutions to improve economic frameworks and institutional capacity. The World Bank does not operate on speculation or emotion. Its decisions are based on data, risk assessment, and strategic planning before engaging with any country's financial system. It conducts extensive evaluations that include economic stability assessments, institutional reviews, policy analysis, and infrastructure readiness. These processes take time, and involvement usually comes only after certain benchmarks have been met. When the World Bank engages with a country's monetary or financial infrastructure, it sends a powerful signal to international banks, institutional investors, credit agencies, and multinational corporations. That signal is that the country's economy and financial system are being taken seriously. This is not symbolic. It has practical consequences for how markets perceive risk, credibility, and long-term potential. World Bank involvement is operational, not ceremonial. It often includes technical assistance, policy coordination, banking system modernization, compliance alignment, and support for transparency measures. These are the building blocks of currency stability and international trust. Without them, any attempt at currency reform would be fragile and vulnerable to reversal. What makes the current situation especially notable is that two emerging market currencies are involved, the Iraqi dinar and the Vietnamese dong. Both currencies belong to economies with strong underlying fundamentals, had incomplete integration into the global financial system. Emerging markets drive a significant portion of global economic growth, yet their currencies often lag behind due to structural inefficiencies, historical instability, or limited financial infrastructure. Institutional support is what bridges that gap. For Iraq, this journey has been long and complex. Iraq's economy has endured decades of conflict, sanctions, political instability, and reconstruction challenges. Despite this history, the country possesses enormous economic potential. It holds some of the largest oil reserves in the world, occupies a strategic geographic position, and has been actively working to modernize its economy. However, a strong economy does not automatically result in a strong currency. Currency credibility is built through consistent policy, disciplined monetary management, transparency, and trust. These elements take time to develop. Over recent years, Iraq has implemented banking modernization initiatives, expanded digital payment systems, strengthened anti-corruption frameworks, and worked toward international compliance standards. These reforms are foundational rather than cosmetic. The Central Bank of Iraq has played a central role in this process by focusing on monetary stability, inflation control, financial oversight, and banking sector reform. World Bank involvement reinforces and accelerates these efforts by providing expertise, oversight, and international alignment. Without institutional backing, any currency shift would be unstable. With it, reforms become measurable, manageable, and credible. Turning to Vietnam, the country's economic transformation over the past several decades has been remarkable. Vietnam has evolved from a war-torn nation into a major manufacturing hub and a key player in global supply chains. It has attracted substantial foreign direct investment, maintained consistent GDP growth, and expanded its infrastructure and industrial capacity. Despite this growth, the Vietnamese dong has historically remained undervalued in global markets relative to Vietnam's economic performance. This disconnect between economic fundamentals and currency perception has long been noted. World Bank involvement may indicate that this gap is being addressed through improved currency mechanisms, increased liquidity, and deeper integration into international financial systems. Seeing progress on both Iraq and Vietnam simultaneously is not coincidental. Large financial institutions rarely move independently. Coordinated attention across multiple countries often reflects broader policy frameworks or strategic initiatives related to emerging market integration. This suggests system-level planning rather than isolated action. It is important to address common misconceptions at this point. World Bank involvement does not mean an instant revaluation or sudden exchange rate adjustment. Currency transitions occur in phases. Gradual change is healthier because it reduces volatility, protects financial systems, and encourages investor confidence. Sudden, unsupported jumps often result in instability and reversal. This is why institutional-backed progress, while slower, is far more durable. It creates systems capable of sustaining long-term stability rather than producing short-lived spikes. For currency holders, this development offers three important things: validation, preparation time, and clarity. Validation comes from the fact that the World Bank does not invest time or resources into economies without genuine potential. Its involvement confirms that progress is real, even if it is gradual. Preparation time is equally valuable. This period allows holders to verify their holdings, ensure documentation is in order, and work with legitimate financial institutions. Preparation reduces stress and uncertainty later. Clarity comes from focusing on credible information. The currency space is filled with misinformation, exaggerated claims, and unrealistic promises. Responsible holders rely on central bank announcements, World Bank publications, and reputable financial news sources. Evaluating information critically is essential. Ask whether claims come from official sources, whether documentation exists, and whether the information aligns with how international finance actually works. Even with institutional support, risks remain. Political changes, economic cycles, and global instability can affect outcomes. Responsible holding means diversification, patience, and avoiding emotional decisions. Currencies are not lottery tickets. Emotional discipline is critical, especially after years of waiting. Decisions should be grounded in facts rather than excitement or fear. Stronger currencies support trade, investment, consumer confidence, and economic opportunity. These benefits extend beyond currency holders to entire populations. Currency stability improves purchasing power, access to goods, and economic mobility. This is about real-world impacts on people's lives, not just numbers on a screen. Institutional involvement matters far more than rumors because institutions operate under accountability, oversight, and professional standards. They protect their credibility and act based on data rather than speculation. History consistently shows that disciplined, patient strategies outperform impulsive reactions. Successful currency transitions in other markets took years, involved institutions, and prioritized stability. Going forward, important indicators to watch include reforms announced by the Central Bank of Iraq, policy changes from the State Bank of Vietnam, updates from the World Bank, and continued banking infrastructure upgrades. At the same time, it's important to avoid guaranteed timelines, fixed-rate promises, and insider claims that undermine credibility. Community matters as well. Healthy communities share verified information, encourage patience, and discourage hype. Choosing credible sources and grounded discussions helps maintain perspective. This development marks a turning point. But it is not the end of the story. The conversation is shifting from whether progress will happen to how it will unfold. Knowledge is power in this space. Understanding fundamentals protects against panic and misinformation. Staying calm, informed, and patient is how long-term outcomes are achieved. This channel exists to provide factual analysis, avoid hype, and track verified developments, nothing more and nothing less. You are witnessing a rare phase in financial history as emerging economies align more closely with global systems. Few people ever observe this process from the inside. Whatever the outcome, being informed and prepared puts you ahead of speculation-driven narratives. The World Bank's involvement is real. It is meaningful, and it represents genuine progress. What happens next will take time, but the foundation is being built, and that is what matters most right now. Thank you for watching Iraqi Dinar Focus. If you value facts over hype, structure over rumors, and long-term thinking, consider subscribing and staying connected. I will continue tracking verified developments and bringing responsible updates as they occur. Stay informed, stay prepared, and stay patient.